Thank you for hanging out for Wednesday night's AfroEconomics Live. I don't know what came first, AfroEconomics Live or Wednesday night, but they come together every Wednesday night, God willing, at 8 p.m. Tonight's topic is about tax loopholes. Who started the discussion? It was politics. Yes, indeed. I was looking at a headline and I'm going to share it with you so you won't say that I made it up. And everything. Do you go to these websites now and all of them like want you to take the ads and they get mad if you have on your browser that you don't want to get the ads? Come on. That's well, don't worry because when you go to afroeconomics.com, I will not make you you will not have any ads. Nobody advertises on my site but me. That's right. So let's check this out. This is an article, it was on CNBC.com, and it has this is the headline. Read it out loud. Biden tells donors, I'm going to get rid of most of Trump's tax cuts, and a lot of you may not like it. He said it loud and proud. And a lot of you might not like it. And then he went on to say, like that was like not the, and he said which ones that he was looking at, and it was about the look at this one down here. I'm going to close loopholes like capital gains and step up bases. Now, according to my mom, he's going to be the next president. So we need to know what's on his mind. I'm going to close loopholes like capital gains and stepped up basis. So the important part for you is I want you to know what that is. I was like, most people don't even probably know what he's talking about. Like he's talking to you. Look, he wants to motivate us to get to the polls. Well, you got to talk to me, right? So, what is a tax loophole? Well, a tax loophole is actually a legitimate tax deduction. That's why Dr. Williams was like, don't take away my legitimate tax deductions. But but hey, like they joke on it and they say that basically a tax deduction is when you're taking it and a loophole is when your neighbor is taking it, right? And you don't get to take advantage of it. So the basic definition of a tax loophole is a provision in the tax code that allows taxpayers to reduce their tax liability or reduce your tax bill. So you are able to, it's not like he's saying that basically I'm going to take away something that we actually gave you the right to do, like the capital gains tax being lower than your income tax rate. So, and then also the step up. So, I want to step up in basis. I want to show you a graphic to help you understand this. Because when sat there thinking about it, and I started and I got like this smile on my face. And then like Michael was like, why are you smiling? Are you like losing it? But I just found these graphics that I said, so I didn't tell him. I just said, I'm just a happy person. But I smiled because I found these graphics that I think help bring home this whole thought of the capital gains taxes. And so capital gains taxes are when you sell, for example, let's say something that you can mostly all of us can relate to. You have this real estate rental property. Down the road, you sell it. You bought the real estate property. Let's just keep it clean. We're not going to talk about depreciation and all of that and make it complicated. Let's keep it simple. Your cost basis is $100,000. You sell it for $200,000. So the accountant tells you you have a capital gain of $100,000, but a long-term capital gain because you kept it for 10 years. So this is if your income tax bracket is 40,000 income tax, 40,000 to zero, then you don't have to pay any taxes on that capital gain. If you're married and the household income is $80,000 or less, you don't have to pay anything on that. And if you're head of household, then you and make up to 53,000, zero capital gains tax. And a lot of you did not know that it was possible to make money and actually have to pay zero taxes on it, did you? So a lot of times that's where membership really pays off, and some of the members will tell you. Because when we're doing our meetings and they start telling me about stocks they need to sell or money they need to raise or properties they're about to sell, then I immediately start thinking about, let's look at last year's tax return. I want to look at where their income was. I don't just like start spitting out stuff, because if they have household income, married, and their household income is 300,000, there's no reason to talk to them about, I mean, I would still talk to them about it, but they're they're not going to want their income to go, or be able to, in many cases, get their income together down to less than 80. It's just hard. Like, a lot of that could be W-2 income because they have good jobs. So you can't control but so much of that. So, but they're at 15% versus at 20%. And then if we go down, I think I have this is a graphic on income tax brackets. So look, that was capital gains tax bracket, but income tax brackets are much higher. Even if you make less than $9,000, up to 10% could be taxed. 12%. At $40,000, you're at 12%. But at the capital gains, you still would be at zero at $40,000. Does that make sense? Say yes. So Biden is saying these these tax brackets should be more in line with the income tax bracket. But what I don't know specifically, if he's going to impact these lower incomes, or if he's going to focus on just the 400,000 a year plus 400K. Somebody with making 400,000 is a whole different taxpayer than a person at 40,000, or joint with, at, and which is amazing. Like, this single person, this, like, over here, that married couple, that should be like 800,000, but that's a whole nother discussion. But it's like, they don't let two people, you're kind of taking away the benefit, because there's two single people would still be at 15, but two single people making 400 would be way over here in the 20% tax bracket. If they were married with the same income, their capital gains rate would be at 20%, which is still a good rate with 800,000 of household income. But it's interesting that they don't just double it, for, so assume, because most people now, they're, both people are working in the household, I would say. I don't know, I would have to really check the numbers, but there's a lot of double income households now. So but this is what Biden is saying, I'm going to get rid of. And I would keep up. I don't want to keep up. I'm going to take it down, because when I leave the graphics up a lot, then it just looks like a whole bunch of, like, the white sheet, because I'm not even sure if you can even see it. And I can't make it but so big. Sometimes I think, should I put it behind me? But the bottom line, now I'm going to go back into the graphics, and I'm going to show you a recent article about where he said he was going to focus. But what it made me think about was, is he really focusing on the right things? Capital gains and step up. I didn't tell you what the step up basis is before I go to, is he really focusing on the right things? Is that really where the money is? Because we may have to help him focus in the right areas. So that's where you come in, Dr. Williams. You go and you tell him which ones to focus on if he's trying to use it to raise money. So look at the step up basis. I like this graphic too. And I don't know, I'm trying to stretch the screen, but it won't. So I hope that you can see what I can see. So What's a step up in cost basis? I love this. This is a beautiful tax allowance. I'm not going to call it a loophole. The step up in basis is a beautiful thing. I was talking to a client about it last week. She was talking about she wants to pass on a particular asset upon her death to her daughter. And I was explaining to her this exact scenario, not even thinking that we'd be talking about this week. But, here it is. This is an example of using a stock that was purchased, but this could be an investment property. This could be your business that you started. This could be shares of stock. So this example is just shares of stock. So you have these shares of stocks that you bought in Morris Company with using $1,000. That was your cost basis. And then you decide to give it to this person while you're living. Well, that and it has increased in value to $5,000. Well, when you give it to a person while you're living, you do not get the step up in cost basis. So what Biden is saying is, I want to stop this. He wants everybody to not get that step up. But the step up is a beautiful thing, because what happens is when your family inherits it, the current market value of that stock, say you bought it at $1,000, 10 shares, and now those 10 shares have split and all this and doubled and tripled in price, and all of a sudden you have 5,000 or $1 million of that stock. And then that upon your death, that your actual beneficiary of that asset gets the market value at your death as the new cost basis. So you could have bought it for $1,000. It goes up to $1 million. They inherit it at $1 million and can sell it the next day and not have to pay any capital gain. Yes. So because there was, they didn't make any gain. They sold it at the same price in which they purchased it. Now, talk to your tax advisor about all of the specifics, but it is very important that we do tax planning. So that's why it's important for me to stay on top of this as much as I can. But I cannot say that I am your specific tax advisor like your tax prep person or your CPA or your accounting person would be, because I don't do tax prep. I don't prepare your tax return. I just assist you in planning. But like on the bottom of this, it says, for illustrative purposes only, and not intended to be misconstrued as the rendering of personalized legal, tax, accounting, or investment advice. Not all assets are eligible for a step up in cost basis. Assets held in certain trusts are not eligible for a step up in basis. Consult your attorney to discuss your situation. So this graphic probably came from looking at it from an estate planning perspective. So it helps in estate planning, but you also, sometimes people think that a trust is the answer to everything. And I appreciate they say in here, assets held in certain trusts are not eligible for that step up. So be careful on when you do things and establish things, how are they impacting you upon being able to take care of things. But I tell you, if he changes that step up provision, there's going to be a lot of crying, a lot of crying. Because, like, just imagine, like, people are, wait until death because they want that step up provision. So there's a lot of, assets that are passed on that really, because they know how to structure it and they know how to plan it and they're members of AfroEconomics, they are able to really do some planning for their legacy. Let me look at your um questions real quick. Oh, good. Oh no, I saw that. Who's good? I hope you haven't said, oh yes, definitely. Definitely. Ms. Jones, you're right on it. Thinking exactly. So then I want to look at, so we talked about what the step up in basis is. So what he's saying, and what this becomes a political issue, is because if the step up in basis is allowing taxes not to be paid on that growth of $1,000 to $1 million on that asset, that $1 million is inherited, at that market value, the new market value. And that is something that has been happening in the stock market for as long as I can remember. Many people do not know that that's how it works. You can inherit a stock, and you inherit that stock at that market price then. Yes, indeed. That's the new market price. So, just those are the things that we need to think about. And those are the things that when people say, "Oh, well, I'm not old enough to worry about that, or I shouldn't be thinking about that." No, like all of these things, we also should be thinking of, like, when we're thinking about our vote, how would these things impact us? How will it? Because there's some people who don't have anything to inherit. But imagine if your family owns some land, and they bought that land for $5. And now let's say the land is worth $2 billion. Well, if the family member passes away, you inherit that at the $2 billion value. Versus if they give it to you while they're living, you get it at the value of their cost basis. It goes on through. Mm. So if you sell it, then you've got to contend with that original cost basis. Wow. But then I guess you could keep it forever, and then it continue to flow through. But Biden is saying, no, we want those tax money. We want to start getting that. We want to start collecting that. Indeed. But in researching, I found that when you look at, like, well, look, it's two different ways, but let's just look at, this is what was found out of their campaign. And these are the places where they want to actually, they're saying how they can get their $3.4 trillion in tax increases. So their argument is that I'm coming in, I'm going to get $3.4 trillion in taxes, and I'm going to repair this healthcare system, and I'm going to repair the schools, and I'm going to correct the climate and protect the climate, and I'm going to correct the roads and infrastructure and everything. And how am I going to do that? Because I'm going to get capital gains. Remember, I showed you those capital gains are taxed now at a lower rate than your income. He says, no, I'm going to start taxing capital gains as income. This is out of their Biden campaign. Bloomberg put this up from the Biden campaign information. And then they want to increase the corporate tax rate to 28%. And then, like, so I was like kind of looking at this as what's corporate and what's personal. And if you check off, to me, it seems like more things impact you personally, or more things are individual than they are corporate. And I think that a major strategy could be for him is to leave up, leave out maybe the step up, because look at what a difference it is. The step up, he could get 440. It's not really as devastating as you think, where you could increase this corporate tax rate back to as high as it was. It was over 30% before this tax cut. Now it's at 21%, but you can put it back at least 30% for the highest corporate tax rate. And you could get that, much more than that. And then you could help the little man. I have seen even the little man benefit from the step up that we were just talking about. like just a person who just has some stocks from work that they've been saving, and then they're able to leave it to their family, or they have the farm and the family inherits it. That this step up in cost basis is something that I do feel that you don't have to be rich to benefit from. But this corporate tax rate, get after it. He can increase that and leave this alone. And then this 10% corporate minimum tax, this is related to this is related to this thing right here. And I don't know if you can see it, but it's called GILTI, and it is a global intangible low taxed income. And it's for companies, for foreign affiliates of US companies from intangible assets that they have they're creating income for them overseas. That's the way I'm interpreting it. Now, I don't know, but this 10% corporate minimum tax, because I know that I saw that this GILTI has a 10% minimum also. But couldn't you just focus on them and then maybe allow the smallest businesses based on, like, lower income, maybe don't have, like, it has to be a minimum corporate income tax, like it could be lower, but focus more on those larger corporations that are doing business overseas and hiding the income. And right now you're letting them only pay 10% on that global intangible low taxed income for US companies with tangible assets that are in foreign affiliates. Now that's interesting. We'll watch that. Like, see if you hear about it. Like GILTI, those little acronyms, be careful. Be careful. So but then the 21% rate on foreign profits. Yeah, 21% tax rate on foreign profits. Why does it have to be so? That's really, they're talking to small businesses right there. Who wants a 10% minimum tax? I don't know. Might not let them have it, because this is the 21% rate on foreign profits. But that GLI, that foreign one, it has a 10%. They could increase that. Then this foreign profits overseas, why wouldn't that be 28%, just like over here? If you go overseas and you generate income, we have to pay US personally, you would have to pay US income taxes on that income. So that the who is the so I don't know. I just saw your comment. Y'all talking. I can't see the chat comments. I thought so too. Andrea, I'm not sure. But yes, Biden is a Democrat. But I'm not sure if you were talking to me about that. But yes, he is a Democrat. But we could increase this one, so you can leave the personal stuff alone as well. Cap deductions for the wealthy. Cap deductions for the wealthy. Yeah, there used to be, like, on your itemized tax, that you would have a maximum amount of itemized deduction. There's still caps that have been put in there, but it just took off, like, the percent, some of the caps on the over 400,000. It was like a piece. It was a peace tax strategy. The last name was PEASE, but he's saying he wants to cap the deductions. We have to see more details on that, and then be very specific about who's wealthy. And then sanctions for tax avoidance. 200. This is 200. That's billion. So this is in billions. 200 billion in tax avoidance sanctions. We need help on that. We need avoidance. Tax avoidance is not illegal. That's what I want to put down here. Tax avoidance. This is the definition. Tax avoidance, don't sanction me for tax avoidance. That's what we do for our clients. Tax avoidance is the legal use of the tax regime in a single territory to one's advantage one's own advantage to reduce the amount of tax that is payable by means that are within the law. Don't understand how you're going to do sanctions for tax avoidance. We need to have sanctions for tax evasion. So hopefully they have a typing error on that. And then 39% for the top individual rate. But look at the little bit of money that you'll make from that. Close real estate loopholes, even less money. End fossil fuel breaks. They just need one more thing, one more problem, right? But you look at these things that are actually the biggest, that he has as the biggest. I'm not quite sure. I think to say that your top one is tax capital gains as income is a way to communicate to corporations that I'm not just picking on you. And then to put 28% capital tax rate, where this would be the biggest. Like he's saying, well, people are going to have to pay for this the most. So you can have 800, but you can put this corporate tax rate a little closer to where it was under your previous administration. When he was in office before, it was over 30% for the corporate tax rate. Go back to that and then leave the look, capital gains alone. but but definitely it's a lot of things are about marketing and how to make it look good. Because look at this. This says estimates for fiscal this is 2016 in billions of dollars. The biggest federal tax breaks actually went to employer corporations again. Nah, but you get the break because the employer paid health care. They get to, of course, write it off, but you don't have to count it. You don't have to count your employer paid health care expense that they pay for, that you don't have to count that as taxable income. Now, to me, that is more of an impact on people with money, because who works for companies that have paid health care insurance? Because most people I know, they're paying for their own health care insurance, even when they're working for the state. None of these, companies, unless you're like, so this is like $143 billion of employer paid health care. That's, that is, if they wanted to actually get income from the individual that has money, they would stop allowing that to go through not as taxable income. They would start taxing you on that as income, because you are getting, those of you who have employer paid health care, that is a benefit that is paid for you, and you're not paying taxes on that benefit. So, and then the lower tax rate on dividends actually falls below that as federal, as possible income, these are like possible ways for the federal government to raise money off us. Like, it's not like, I don't know. They're saying here in this Pew Research that lower tax rates on dividends and long-term gains is 134 billion, but they're saying up here it's 800 billion. And that's not that many years difference. This one says on here about estimated at federal tax expenditures for fiscal years 2015 to 2019. So I don't know where he got that 800 billion from adjusting it. I don't know. Deferral of active income to foreign corporations. That's a business one. 108. The contributions to retirement plans at work, 82. That's an $82 billion tax break that taxpayers get. I mean, and the mortgage interest deduction. Now, I've seen this. I've seen it several times say that it's around $80 billion. You all have heard me say that they talk about like how subsidized housing is such a burden on the government. You know, when the housing numbers that I have seen with subsidies is like 25 million or something. This is $77 billion that the government gives up because they allow people with a mortgage to write off the interest. Owner occupied residence. That's 77. I'm not making this up. This is Pew Research Center. Earned income tax bracket 73 billion to that, but that is still less than mortgage. So who's really getting the subsidies? People that work for large corporations, right? It's amazing. The contributions to and earnings of defined benefit pension plans 57, because the money is growing without paying taxes on it. Credit for children 56, by allowing us to write children off. Subsidies for insurance patrons through the Obama plan, the Affordable Care 53 million. I mean billion, 53. Look how far that is down there. Employers and allowing employees to write off, to not have to pay taxes on it. They're getting more. These rich people that have these great jobs where the company is paying for their health care, they're getting more of a tax break than the people who are purchasing insurance through Obamacare. That's amazing to me. But yet you're going to put on there that you're going to raise the money, and then they wonder why it doesn't get balanced. I mean, how are you going to balance it when your numbers are all off? You are not going to get $800 billion from capital gains adjustments, because as soon as you do that, people are going to slow down taking the capital gains. they're not going. They are going to. We are going to find another strategy because we're smart like that. But taxing someone on their free benefit, then no, look at it. That's funny that the sheep pops out because somebody didn't plug in their computer. So it powered out. The but definitely everything we look at, we have to make sure that we look deeper at the numbers, look at why is it happening. If some things are changed for you, I would just know, regardless of who gets in the White House, we are going to figure out tax strategies to do that. You the A high threshold. Real estate tax deductions have also been I know on your state, on the your municipality taxes on, and that was with that new tax act so that's already there. They're already, so even if he brings back the old cap based on income for the itemized, as you know, that it's still, you already have a lot. It's kind of like they just kind of switch things, but you still end up often at the same place, except for, think about the fact how many people are working from home, and now you have no more working from home tax deduction. Your employer should be reimbursing you for the use of your home for your office, because you cannot write it off unless you have a business and a section of your home exclusively committed to just that business. Can't sleep in that space. You can't have play area in that space. You can't have, it is exclusively for business, for your own business. But when you work for someone, it's a totally different. You can no longer write off those unreimbursed expenses with your employer. So definitely good to see you, Ms. Palmer. The That's right. Get indeed. And then you have to use your Schedule C to get that write off for your personal business. Indeed. But so the bottom line is, what is a tax loophole? That is finding a legitimate way to save money. Like the to put on, like I think that this, needs to be changed, where it has in Bloomberg, where they have on here that sanctions for tax avoidance, like $200 billion from sanctioning people for tax avoidance. It's got to be a typo, because tax avoidance is not illegal. Tax evasion is what you would be sanctioned for. You want to be smart and to avoid taxes by following the law. And then, but I really hope that we can move towards pushing our politicians more towards um, get the tax burden of raising money be on the businesses, be on the businesses that are in a position to, like, why should this corporate income tax rate be lower than your individual tax rate, your individual tax rate? So this is a 2020 tax brackets. They go up to 37%. 37%. 37%. Currently, the corporate tax rate is the United States imposes a tax on the profits of corporations at a rate of 21%. That's down from 35%. Why should a person pay a higher rate than a business entity? And then you don't even want to bring it up to where it was. What was wrong with 35% if you're trying to raise money, since that was your administration? That was when Biden was in charge. It was at 35%. Are you just doing this because now it's the campaign, and when you come back later, will you make it higher? I'm gonna get my mother to talk to him. Well, we're gonna see what happened, but it's only, I think that you all would agree with me, that an individual should not have to pay higher taxes than a corporate entity. Look, why would the individual have to do that when the corporation has so many more things they can write off? They can write off their income. Is truly income. Your income you have to pay taxes on it, then you pay all your expenses, and you got to pay a higher rate. Don't believe the hype. Hmm. So let's definitely, work on that. Be careful. Stay on top of that. Talk to your local officials. Write letters. Address that. Talk to your local congressperson. Why should my individual tax bracket be higher than the maximum tax bracket that I'm not going to say, I almost said a business name, but then all these big companies, they will never have to pay as much taxes as, you know who you are out there making all that money. You have to pay more. A higher percentage of your income has to go than to, you know, let's just say a superstar. Beyonce has to pay higher taxes than these corporations have to pay, making way more than her. Mm. Yes. And exactly. Andrea said, thanks to the Supreme Court, a corporation is regarded as a person. It is a separate entity. So whenever you go, like own, I am the sole shareholder of my corporation, but I cannot represent the corporation. So whenever I want to do something for my corporation, a corporation has to hire an attorney. So that is really, you can't represent yourself. Mm. But what if Beyonce is part of her own corporation? Yeah, she has to pay corporate taxes and personal taxes like me. Her corporation may be paying her out like mine. So why would the corporation, but I'm not saying it for our sake, as this is rare when you're talking about two business owners also, but I'm just saying, like, just a rich, you know what I mean, person. It's like just this, you know what I mean, a rich person, the personal rate is higher than but the person itself can create a corporation, but the person cannot be incorporated. You can own the corporation. You can just own the corporation. But that individual has to get a W-2. The business can get a 1099, or a corporation doesn't even have to get a 1099. It has to report its income, period. 1099 or not. But individual, they force them, the W-2s are, you have to pay that income during the year. Or an individual could get a 1099, but they still will have to pay more taxes than if they're getting a whole lot of money. So if they're making $500,000, their percentage is higher than a business making $2 billion. Mm. So there's no excuses. That shows that corporations run the government. Because how in the world can you justify not putting it back where it was when you know you need money? I don't know how we're going to get out of all of the money that we've given out. You know, how we're going to get out of it? They have to make those type of moves. You're going to have to go back and raise more money. And you can't take but so much from people. And then if they do make people start paying for their health insurance premiums in income taxes, you know, that will raise a whole bunch of money. But you might not vote for that person. So then they have to go for that. Like, you're the one, that said that I had to pay taxes, because health insurance costs like $5,000 a year for some people, $6,000. There are some companies, they are saying that next year health insurance for on individual people might be $20,000. 20,000 each employee, because of this, trying to pick up for the cost of COVID when these companies come up for renewal. That's going to be a serious issue. And that's going to be 20,000 of non-taxable income. That's a benefit. And most people, unfortunately, that don't have insurance are Black people that don't have. There are a lot of Black people right now who have lost their insurance because of COVID. And if you are one of those people and you don't have any insurance and you have questions, you call me so I can explain to you what you need to do and how to get it done and how to get that protection. How to get that protection now. Because a lot of it could be that when they're saying that our death rates are higher, and then now they're saying racism is creating this COVID problem. What it is racism creates poverty, which creates this problem of having the proper health care coverage so that you can just walk into the doctor and get the test. That's the challenge. That this economic disparity started generations ago, so that we're much more likely to be in an industry that doesn't have the benefits package, that doesn't have the protection. And that's why we need to make sure that we create a nation that has health care for everyone. You want to say that Black Lives Matter? Well, you make sure that every Black life has health insurance. Then I'll believe it. Then I'll believe. But just getting up on stage and saying Black Lives Matter and then not having affordable health care, not having health care for everyone, it doesn't matter, because you know right now, you said, CDC said that we're dying. So we got to do something about this. What do? You get people the proper coverage. You look at this correctly. Those who are getting it, getting absolutely free. More money is going in to allow people to not pay taxes on that income. We saw it right there in the graphic. More money is going in they are losing more money off letting you not report it on your income taxes, the coverage that you're getting for free, that is going in to supplement this Obama affordable care. I mean, way more. Before you leave me, just look at it again. Just look at it again. Now, this is the Pew Research saying these are where the federal money, biggest federal tax breaks, employer paid health care. The last one, subsidies for insurance purchased through health benefit exchanges. They're talking about the healthcare.gov Affordable Care Act at the bottom. All right. You want a tax loophole? Look at the list of the biggest tax breaks that you're giving away. Look at the list. And go to the corporations. Now, this is just individuals. When you look at, the corporations, that's easy. They're at currently maximum 21%. You want to bring it to 28 when it used to be at 35. Why? Why did they get the break? 35%. Changed in 2017. Voted in by both House and Senate to bring it down. So they can't blame me. That's everybody agreed that it should be 21% for these corporations. They run it. They run it. Definitely. We don't have look. It's the best loophole that you can get is being able to pay a lower tax bracket. I give them that capital gains tax rate, that's low. We don't get any benefit of that as a community. No big. We are not pulling down this country by any means. The little support that the poorest among us get is not impacting this government in the least bit. It just gets the headlines. But stop believing that we are a subsidized community. We are not. We're just getting part of what's going on, but at the exact bottom. And it wouldn't even exist if the government itself had not allowed us to be restricted in what we could buy, what we could finance, access to loans, access to VA loans, access to their own FHA loans. If we had not been limited to, you couldn't even go in and become a stockbroker, and you definitely couldn't go in and buy stocks from someone. The firm I started at, I was the first Black person, the regular Black person, the only Black person before me to be that they allowed in was a Hall of Fame football player. Then me. Years later, this lady told me that very firm I worked for, they wouldn't even allow her husband to buy stocks from them. That's why they had all their stock certificates in the house. I said, we got to do something about this because something could happen to your house. It could burn down. You'll lose all this. She was like, I don't know. But they don't want to address that this happened for generations. And it's hard to catch up when you weren't even allowed to get in. So, but we by no means are pulling down this country. We're pulling it up. We're pulling it up. Have a great week, y'all. Thank you. Thank you. Thank you. Thank you. The does this include the portion of health insurance costs that the company pays? That's right. That's only the part that the company pays. And look at how big that figure is. That part that the company pays is supposed to be taxable income, but the government allows you to not recognize that benefit as income. And that's income. It's a loophole, and it's a big one, just like mortgage interest. And the bigger the house, the more money you make, the more interest, the bigger your payment, the more interest you have. They just started limiting it with this new rule, with the new tax changes, where now you only can write off to like 750,000. of the principal, the interest on 750,000 can be written off when you itemize prior to these recent year changes. So don't believe the hype when they say that, oh, all these changes, all these were made for rich people. It took two sides, both parties, to agree to these things, and everybody is agreeing that corporate tax rates should be lower. Why? Asset. Why? And why should people really, when the majority of our community is not getting any benefit to that mortgage interest write-off? You can't write off credit cards. You can't write off your car. Why should you be able to write off interest on your home? No, that's really like when we have to think about that is a huge subsidy. But yet we have schools that are not, in our communities that don't even have a computer for every child. The kids aren't even getting, they don't even have Wi-Fi to take home right now. But you're letting these people moving into the same community that send their kids to private school write off the interest on their house, but not, it can even write off, even write off the taxes that you pay on that house. Why do you get to do that? No, like that. So you're already ahead. Then you get all these things in your favor to keep you ahead. And then the poor person is told, oh, they need $1,000 a month. Oh, they need that. Then they cut out anything, reduce any grants that you can get for your education, can't allow college to be free. You gotta pay for college because that would just be too much on the government to have free college education. But we're gonna allow everybody to write off their interest on their house because that's important. And matter of fact, your employer can spend $10,000 on you and you don't have to pay taxes on that either. Isn't that something? Then we wonder, but makes you think, doesn't it? Really makes you think. Yes. Is it possible to examine what Bernie or Elizabeth had proposed? Nah. Were their plans really more progressive? I don't even know. We shouldn't even look back because this is it. We got to make this work for us. Thank you so much, Dr. Witt. We have to make it work for us. No matter what happens, I'm going to learn. I am going to focus on how to make it work to your benefit. Consider joining AfroEconomics. Remember, there is a free membership. We have our meetings every Friday morning, and then you can always upgrade later. That free membership does not run out. It's forever. One of my webmasters was like, this should just be temporary. I was like, no, we don't do that at AfroEconomics. You stick with me, I stick with you. I'm on your team forever, forever, indeed. Thank you, Rosita. Thank you. And you'll be getting your book soon. You make sure now, as members, even free members, you get to go and download the book and log in as a member and you get the download. It's not as beautiful as the actual book that you know, that Rosita's going to get with her workbook. But the definitely you can download, and I uploaded I just enhanced the 5th chapter and put my actual verses in there. But definitely go in and download because everybody needs to focus on those 10 principles. Have a wonderful evening, y'all. Thank you so much for everything. I appreciate you all so much, more than you'll ever know. Go to the YouTube channel and please subscribe. Go to our Facebook, AfroEconomics with JB Bryan page, and please subscribe there as well. Take care. Email